Let's check in with Tyler Alston from Business in Vancouver. Good morning, Tyler.
Good morning, Sonia.
So we've got an announcement coming from the Bank of Canada on interest rates, and what are you expecting there this morning at 7?
Well, you know what? I'm expecting a lot of people to be relieved if they don't want the Canadian dollar to go plummeting down. Because as you said, it's at 78 cents right now. That's 10 cents higher than it was in January. But a cut to the benchmark interest rate, it would take the loonie down significantly. And that's actually the goal of having a cut to the interest rate. The Bank of Canada cut it twice last year as the oil shock just rattled the economy. The idea here is a lower dollar is going to boost exports. And you know what? We've actually seen quite a bit of strengthening to the Canadian economy just since the beginning of the year. GDP grew 0.6% in January. That's a significant number. And then just last month, we gained 40,000 jobs across the country. So economists don't expect the interest rate to be cut or to be lifted going forward at 7 a.m. today. Right now, we're going to hold steady with regards to the Canadian economy. That's what most economists expect. But further on in the year, there are some more question marks about whether this strengthening of the economy is here to stay for the rest of 2016.
Right, but right now, the wisest thing to do is just to keep it sustaining at the level it's going, so we're not scaring the economy, if you like.
Exactly. I mean,
with any changes.
There's just been so much surprisingly good news coming out in the last few months. That's why I think the Bank of Canada Governor Stephen Poloz is just going to hold steady for now. Now,
I've got to talk about this because when I first looked at it, I had to do a double take. We know that we've been talking about the crazy house prices here in our province, and especially in Vancouver. But the most expensive place in Canada for a hotel room?
Well, yeah, this is based on property sales going on last year. This is according to new data from HVS Canada. British Columbia, we're leading the way when it comes to hotels being sold. Last year, we had $769 million in sales. That's a jump of more than 30%. So it's huge. If we break it down by the average per hotel room, it's going to go down to $269,000 per hotel room. And in Alberta, it was just $119,000 per hotel room versus Ontario, under $100,000 per hotel room. So think about it this way. The Western Bayshore, it sold, for a huge amount last year. It was about $270 million. So if you divide that between their 511 hotel rooms, you get this massive number. I think it was around $500,000 for them per hotel room on average. That's generally the industry standard of how they measure, the value of each hotel room across each province. So these are big numbers from British Columbia. It's not just our housing market that's really hot right now when it comes to real estate, also the hotel market too.
Well, I guess there's more to look at here than Ontario. Is that too controversial to say?
Absolutely. The surprising thing here is that Saskatchewan, they actually had the second highest per room average across all of Canada. The suspicion here is that, there's just so many more hotels in Ontario, lower end, middle end, as well as the high end versus Saskatchewan. So it is still surprising. Of course, you're absolutely right. There's more to look at than just Ontario.
Yeah. All right, Tyler, thank you very much. Have a great day.
You too. Thanks.
Tyler Alston from Business in Vancouver.